Hello everyone, I am Aditi Khandelwal. Today I will be discussing on an important topic related to rural development and financial inclusion, that is microfinance and the policy and strategic responses in needs today. Microfinance plays a very critical role in supporting low income households, especially in rural areas, small entrepreneurs, farmers and women. However, despite its impact, the sector faces several challenges that requires a strong policy support and ethical regulation. In this presentation, we will understand the key challenges in microfinance and the strategic policy solution that needed to make the system sustainable and inclusive. So now we are beginning with the first slide. The challenge why microfinance need a policy support now. Let us first understand why microfinance needs policy support at this stage. The first one is multiple borrowing. Many borrowers take a loan from multiple lenders at the same time. Because lenders are not well coordinated, borrowers ended up with overlapping loans. This creates a debt trap where repayment becomes impossible. The second one is low financial literacy. A large number of borrowers do not fully understand interest rate, loan tenure, repayment obligation. Due to this, they may agree to loans that are unsuitable for the income level. The third one is climate vulnerability. Rural borrowers depend heavily on agriculture and daily income activities. Extreme weather events like floods or irregular rainfall directly affect their earnings, making loan repayment very difficult. And the fourth last one is weak digital regulation. With the rise of digital lending apps, many fintech lenders operate without proper regulation. They charge high interest rate and use unethical recover practices. So now the second slide is strengthening credit bureaus. One major solution is strengthening credit bureaus is central borrower database. A unified borrower database allows lenders to see a real-time loan data of borrowers, both formal and informal. The second is prevent overlanding. Before approving a loan, lenders can check if a borrower already has a multiple active loans. This helps in preventing over-indebtedness. The third one is improve credit access. When borrowers repay responsibly, a credit history is created. This allows them to access a loan in the future at a better interest rate and terms. Now in slide 3, the financial and digital literacy. Financial literacy is an important as providing the loans. Understanding the loan terms, that borrower must be educated about interest rate, hidden charges, repayment schedules. This ensures informed borrowing decision. The second one is digital payment awareness. Training in mobile banking, UPI and e-wallets build a confidence in digital transaction and reduce a cash dependency. And the third one is fraud prevention. Borrowers should be taught how to identify loan scam, phishing messages, fake digital lending apps. And the fourth one is women empowerment, a specially literacy program for women that improve a financial decision making and economic independency with strength families and communities. Now, the fourth slide is climate insurance integration. Climate risk has now become a credit risk. The first one is protection from climate shocks. Index-based insurance automatically provide the payouts when weather conditions cross a certain threshold such as drought or flood. The second one is income stability. Insurance help a farmer and micro entrepreneurs manage a seasonal income fluctuation. And the third one is better repayment capacity. When income shocks are covered, borrowers are more capable and repaying loans, which reduce the default for MFIs. Now let's talk about the slide 5, that is ethical fintech regulation. Let's first understand what fintech means. Fintech means digital loan apps, online lenders and tech-based financial service. Technology is useful, but without rules it can harm people. Like the first one is in the slide, transparent pricing. Many loans apps do not clearly tell how much interest they are charging, extra fees, late payment penalties. So borrower thinks the loan is cheap, but later they realize it is very expensive. So the solution is loans app must be clearly show interest rate, total repayment amount, penalty charges in simple language, not confusing the terms. The second is data privacy protection. Many digital lenders access a phone contact, read messages, misuse personal data. This is very dangerous. So strict rules are needed so that data is collected only with permission, data is not shared or misused, borrower privacy is protected, money help should never become a mental harassment. And third one is control a predatory lending. Some lenders charge extremely high interest, threaten a borrowers, use abusive recovery methods. This mostly affect poor and rural people. The solution for this is interest rate limits, ban on harassment and threats, and ethical recovery practices. The digital loan should help people, not trap them. Now, the slide 6 is the four pillar at a glance. This slide is very important. In pillar 1, credit bureaus. They stop people from taking too much loans at the same time. This prevents debt traps. The second is pillar 2 in financial literacy. When people understand money, they borrow wisely, they repay on time, they avoid the scams. It's knowledge equal to protection. And in pillar 3, the climate insurance, weather problems directly affect income. Insurance protect borrower during a floods, drought or a crops failure. No income shock is equal to better repayment. And the fourth pillar is fintech ethics. Technology should use be fair, transparent, respectfully. Ethical fintech builds a trust between lenders and borrowers. All four pillars support each other. If one pillar is weak, the whole microfinance system becomes a weak. Now the seventh slide is talking about the impact we are targeting. This slide explains why these reforms are very important. As we see, 1.4 billion unbanked adults, these people do not have access to bank. Microfinance is their only financial support. So improving a microfinance means helping the poorest people. 80% women borrowers, most microfinance loans are taken by women. When women get a financial knowledge, safe loans, its families improve, children get better educations, community grow. That's why women focused policies are very important. The next is 3x default risk reductions. It means when credit bureaus are used properly, loan default reduce, borrowers are protected, MFIs remains financially healthy. This is a good for both sides. And the last is 40% climate exposed client. Almost half of microfinance borrowers live in areas affected by floods, droughts, climate uncertainty. So climate insurance is not optional, it is a necessary. And now the last slide is the way forward, that is future direction. This slide tells us what should be done next. Regulate with purpose. Rules should protect borrowers but not stop genuine lenders. The goal is balance, not restriction. The second is invest in people. Teaching the people about money and digital tool is as important as road, electricity, internet. Financial literacy is a basic infrastructure. And the third one is build for resilience. Climate problems will increase in future, so loans must be designed with insurance, risk protection because climate risk is equals to credit risk. Thank you.